Hi guys, welcome to Oliveboard. We all have heard about saving schemes and we all know the importance of savings. Savings are an important part of our life. They give us confidence about our future uncertainties. There are many savings financial instruments and schemes are meant to encourage savings among citizens of India. Today, in this video, we are going to talk about top 5 such saving schemes in India. They are really important for us in our banking exams preparation and in general too. So let's start with the first saving scheme, National Savings Certificate. So most of us have heard about it. Most of us know about this scheme. A very popular scheme is a fixed income government saving scheme and can be opened at any post office in India. So this scheme is sponsored through post offices. This is tax saving on investment up to 1.5 lakh under section 80C. So most of these saving schemes, they provide a tax benefit, a tax saving under section 80C. So you have to remember the section also, section 80C of Income Tax Act. It's a low risk, low return instrument. Low risk, why? Because it's a fixed income instrument, and that's why the return would be low, because there is a certainty, so the return would be low. 7.6% of interest rate is present in 5 year and 10 year. There are two lock-in periods, 5 year and 10 years. Okay, so only Indian resident citizens can invest in NSCs, and Hindu undivided families, HUF, they cannot invest in this scheme, and minimum amount that can be invested is rupees 100. Now, public provident fund, we all have to should open public provident fund. It's one of the most popular tax saving scheme. So many people, they open it for tax saving as well as for tax free interest rate. So it's a savings plus tax saving instrument in India, and minimum yearly deposit is 500 rupees, which you can deposit in one installment. Okay, so this is a minimum amount, and maximum yearly deposit you can deposit is 1.5. Obviously you can deposit more than 1.5, but that amount would not fetch any interest to you. Lock-in period is 15 years at least, and extended further in blocks of 5 years. Okay, so you can take it for 15 years, then 20 years if you want, then for 25 years also. Loans can be taken with certain conditions. If you fulfill certain conditions and in certain situations, you can take a loan also. Premature withdrawals are allowed with certain conditions and in certain predefined situations. Interest rates are determined quarterly. Presently for April, the present interest rate is same as the NSC, 7.6%. Any amount in excess of 1.5 lakh will not fetch any interest. Okay. Now the third is National Pension Scheme. So all those who are willing to join the government services, government jobs, banking jobs will have to go through National Pension Scheme, because this is mandatory for all the government servants. Government approved pension scheme for 18 to 60-year-old citizens, launched by PFRDA, Pension Fund Regulatory and Development Authority of India, in 2004. This is the most important point here, and it is mandatory for all the government employees who joined after 1st of January 2004. And in 2009, NPS was opened for everyone. So anyone, if he's doing a business, if you're doing say private job, you can open NPS account. It is a retirement pension plan. NPS offers two types of accounts to its subscribers: tier 1 account and tier 2 account. Sukanya samriddhi yojana. So samriddhi, Sukanya, which makes a sense. This scheme is only for girl child. It targets parents of girl child, encourage parents to build a corpus for education needs and marriage needs and other needs of girl child in future. It was announced in 2015 by Honorable PM Mr. Narendra Modi as part of Beti Bachao Beti Padhao campaign. This is important here, and account can be opened at any post office or any branch of any commercial bank with an initial deposit of 1000 rupees. Present interest rate is amongst the highest, which is 8.1%, and the maturity period is 21 years from the date of opening account. Suppose you are opening this account when your girl child is 5 years old, then when she become 26 years, so the maturity time will happen. Deposits can be made till the completion of 15 years from the date of account opening. Okay, so it was launched by PM Modi in Panipat, Haryana. Okay, and if it can be opened any time between the birth of a girl child and the time she becomes 10 years old. So this point is also important. So till she attains 10 years of age, you can open this account. Atal Pension Yojana, it is a pension scheme by Government of India, and it targets the workers in unorganized sector of India. This is the important point here, and it was also launched in 2015 by NDA government, Prime Minister Narendra Modi. This scheme aims to increase social security coverage through pension. Central government will be making 50% of the contribution, or 1000 rupees, whichever is less, for the first 5 years. So this is an added advantage, and the guaranteed pension will be given after you attain the age of 60 years is rupees 1000 to 5000, and it depends on your contribution, right? And minimum age is 18 years of joining APY, and maximum age is 40 years. So minimum and maximum age are important in all the schemes. The year in the recent schemes, okay, and what is the target customers, consumer base, target customer base, or target people. Okay, so please attempt Oliveboard free all India mock test for SBI PO and all the other exams. Okay, and please like, subscribe and share the video. All the very best for your preparations. Thank you.